Hey everyone, I'm James Bowerman with the Real Creative Group, and today I am here with my good friend Armen Manokian with Coastline Mortgage. And obviously I've shot some videos with him before. For those of you watching who may not know who Armen is, Armen, why don't you tell us a little bit about who you are and what you do?
Thank you, James. My name is Armen Manokian. I am a mortgage broker, and I've been in the industry for about 8 years. And to be honest with you, I truly love what I do. Helping clients buying a home is really rewarding.
All right, excellent. Well, yeah, we've done a lot of deals together, so some good history there. And obviously, one of the reasons I wanted to bring you on today, kind of to go a little bit deeper in my market update, we're in a kind of a historic real estate market here, specifically about interest rates.
Absolutely.
Just the speed at which rates have gone up has really affected a lot of home buyers and has some good effects and also some negative effects on the market. So specifically today, we want to get into affordability and some things that you might be able to do to combat these rising interest rates so that you can keep your monthly payment down. I gave an example in my market update of a 4.8 interest rate compared to a 6.8 interest rate, and the monthly payment was a $600 a month difference. So that's a lot of money. It's going to affect a lot of people. So let's jump into some of these things that you're creatively doing and seeing and utilizing to help your clients keep that monthly payment down.
Absolutely. Thank you, James. One of the first things is being able to buy down the rate. And in this market, we are starting to see seller credit, seller concessions become more and more available. We're starting to see more of a balanced market like James mentioned. So one of the things you could potentially do is get a seller concession and buy down your rate, buy discount points so you get a payment that fits in line with your affordability payment and still fits your needs and wants for your family.
Yeah, so just to touch on that, we are seeing the ability now to negotiate. A lot of sellers doing price reductions because the home's not selling. It's sitting on the market longer. So some of these homes sitting on the market 30 plus days, you're able to go in there, be the only offer, and now you have a little bit of negotiating power to say, okay, let's ask for a seller credit, and then being able to apply that to buy your rate down. So you could essentially keep the seller at the price that they're hoping to get, but still get that concession to help make your payment more affordable. And really it's because of these rising interest rates, we're moving out of, I'll say we're moving towards a more balanced, normal market.
Absolutely.
All right, so that's the first one. Let's talk about what's our second option here.
Second option is something called a 2-1 buy down. So a 2-1 buy down, just to make it as simple as possible, in the first year, your interest rate is 2% lower than the rate you locked in at. The second year, it is 1% lower, and then by the third year, it goes up to the interest rate you initially locked in at. The major thing to keep in mind is there's no guarantee over the next few years about a refinance market. Everyone seems to think that will happen. But at the end of the day, make sure you can afford that year 3 payment. That's why we like to refer to it as the affordability payment, because that's what matters.
Yeah, on that note, again, we don't know. Will it be 6 months, 12 months, 18 months? What goes up must come down. We've seen that happen before. So rates will come down. But like you said, that affordability payment and not being house poor, right? But to add on to that too, I will say that the majority of clients I've worked with, you have this 30-year mortgage payment, right? But how long do you actually stay in the house? A lot of my clients, especially repeat clients, they are making more money after a few years, and a lot of them within 3 to 5 years are actually considering selling and moving up. So hopefully things continue to move that way for most of our clients in a positive direction. But again, definitely be sure to make sure that number is comfortable is it the third year, right?
Yep, third year, it goes back to the initial rate you locked in at.
Awesome. All right, so we got one more. What's the third option here?
The third option is as simple as look at your own expenses. Look at what you pay monthly. How many streaming subscriptions do you have? How many, are you still a member of a gym that you don't go to? Just evaluate your monthly expenses. Do you have cable and 10 streaming services? You don't need all that. I don't know how much time you have in the day to watch TV, but that's something to definitely keep in mind when you're looking at your expenses and looking to buy a home.
For sure. Yeah, I think we get to a certain point too, we become numb to it. These things just automatically get credited, get pulled out, and then like I've had times I go, and I just had one I canceled for a audio subscription I had for editing, and now that I have a video editor that I started using, I don't have a need for it. So they were able to refund this $200 a year for this audio subscription. But again, it just automatically renewed, automatically came out. And I'm like, I don't need this anymore. So definitely a good idea to kind of audit your subscriptions and see what's going on there. What about like paying off any types of loans, things like that? Is that something you could do?
Yeah, thank you for bringing that up. One of the main things is also, let's say you have, in a small installment loan, maybe, $3,000 to $10,000 left on it. And when you're buying a home, instead of putting all that money down, sometimes it makes more sense to pay off these smaller installment loans. The payment might be $300 or $400 a month. And that's something where eliminating it might help you realize that you can afford a slightly higher mortgage payment, with eliminating that higher payment out of the way.
Absolutely. All right. Solid advice. All right. Well, if you have any additional questions about any of the things we talked about, buying down the rate, getting the 2-1, Armen, what's the best way somebody could reach out?
You can always reach out to me by text or a phone call. My number is 443-306-8746. And you can also find me by Googling Armen the Lender. Thank you.
All right. Awesome. Thanks, Armen. Appreciate you being here today. Everyone watching, thanks again. If you have any questions, leave a comment. Until next time, see you again soon.